Good morning, and thank you for joining us in the presentation of the earnings results webcast for the second quarter of 2023 of Grupo Nutresa. During this webcast, we have Carlos Ignacio Gallego, CEO of Grupo Nutresa, Jose Domingo Penagos, VP of Corporate Finance, Diana Bernal, Director of Corporate Finance, and myself, Catherine Chacan, Investor Relations Director. After this presentation, we'll have a Q&A session. To participate with your questions, please use the chat which is on the right side of your screen. Those that ask questions, please indicate your name and the institution that you represent. Those that want to follow the slides in Spanish, because they're in English by default, you can download them from the same screen of the platform. To begin this presentation, let's listen to Carlos Ignacio Gallego. Good morning, and thank you for joining us to this conference. To begin, I'd like to invite you to look at slide 2, where you can see the commercial activity of the second quarter of the year. During the second quarter of 2023, we started to see markets, especially with markets that have problems because of the volatility of interest rates, especially for those businesses that export so much. And keeping this in mind, Grupo Nutresa grows double digit nationally and internationally in sales. In terms of Colombia sales, these reached 2,759 million pesos, up 12.9%, and growth volumes of 6.3%. When we see an increase of prices of 20 something percent, I'd like to make an analysis compared with the same quarter of the year before. And most of these increases were made the year before. This year, instead, our activity has much more moderate in terms of prices. And when we look at the outlook, we'll be seeing this. All of our business units show positive growth in value, especially the performance of ice cream, 36.4%, coffee, 23.6%, and pasta. Also, the price variation of 20.6% is because of a very well planned management of prices, especially to safeguard the profitability because of the increased raw material prices and the interest rates as well in the region. Keeping in mind the accessibility of our products. Per business, biscuits grew 7.1%, decreasing in 4.8% because of volume. And here the market dynamics today shows some deceleration of channels. Coffee grew 23.6% with volumes decreasing 5.3%, especially in the value of toasted and ground and instant coffee. Cold cuts grew 9% in sales, decreasing in volume 10.4%. There's more competition and there are more disbursements for buyers along with increased prices as a result of more expensive raw materials, and this has led to lower dynamics in consumption. Chocolates grew in sales 8.7%, dropping 14.2% in volume. Here, inflation has shown the lower consumption. %, with an average ticket. Ice cream grew 29.4%, with volumes decreasing 5.2%. We have been executing price strategies to reflect the increased some of its main raw materials. Pasta grew 16.4% with volumes growing 1.9%, leveraged with a better sales mix of its main brands and a category in which the substitutes it has, which is not only pasta, has grown more in price than the pasta themselves. And this has, of course, increased the volume. In others, we have a growth of 14.3%, highlighting products distributed by third parties. Now, looking at the international sales on the bottom of the slide, we see revenue of $446.7 million, up 11.4%. In Colombian pesos, these sales are 1,977 billion, up 26%. During the period, we see a devaluation of 12.9% of the peso with the dollar compared to the same quarter the year before. Total exports from Colombia were $97.7 million. Per business, Tres Montes Luquetti reported growth of 16.6% in dollars in its functional currency. This is 10.7% with a positive performance in of its two main geographies, Chile and Mexico. When it comes to its categories, what's the one that stands out is cold instant beverages. In biscuits, there's an increase of 27%. USA and Central America still support this growth thanks to the good performance, commercial performance, especially that of Avimar in Texas. Coffee dropped 10%, mainly affected by the exports from Colombia to USA related to the B2B business and a positive performance in Camerons. When it comes to chocolates, we report a growth of 15.5% with a good performance in Mexico of 36.6%, Central America of 17.7% mainly. When it comes to retail food, this grew 22.2%. Central America and Dominican Republic grew double digits. Cold cuts decreased 18.2% in dollars, and this is explained because of lower exports of fresh meat, especially lower profitabilities and lower sales in Panama, where we see that this affects the consumption dynamics. In others, the growth was 26.8%. This is leveraged mainly on the good results of Adelino, our food company for pets. Now, looking at slide 3, we see that when you combine the growth in Colombia of 12.9% and international of 26%, we report total sales during the period of 4,737,000,000, up 18%. All of our business units and the chapter of others report double-digit growths in their sales. The sales of innovation represent 16.4% of the total revenue of the group during the period. On slide 4, we can see the accumulated sales during the first semester of the year. In the first semester, overall, we had good commercial results, with all of the businesses and geographies of the group growing double digit. In Colombia, we reported sales of 5,567,000,000 pesos, up 19.7%, with a positive performance of all businesses. When it comes to volumes, these dropped 1.8%, while growths of prices are seen compared with the same period of the year before. And again, I'd like to remind you here that we're talking about a comparison of the first semester against the first semester, and that most of the activity of the prices was seen the year before. All business units also during the period grew double digit, with coffee, ice cream, and pasta leading this growth. International sales displayed $882.3 million, up 16.7%. In Colombian pesos, these sales represent 4,050,000 million pesos, up 36.9%. The total exports from Colombia during the first semester was $208 million. And all of the business units have positive variation, excluding the cold cuts, which is hurt because of lower exports from Colombia and lower sales in Panama. So now, looking at slide 5, we can see that by combining the growth in Colombia of 19.7% and international of 36.9%, we report accumulated total sales during the first half of the year of 9,617 million, up 26.4%. All of our business units and the chapter of others report double-digit growths. On the other hand, sales of innovation represented 16.2% of the total sales of the group in the period, and it's a big driver for the growth and improvement of the company. On slide 6, we can see sales by region by the end of the semester. Sales outside of Colombia were 42.1% of the total. As you can see, Colombia leads with 57.9%, second, followed by USA, which reaches now 14%. Third in sales is Central America with 10.9%, and the fourth is Chile with 6.6%. So the growth in geographies is key, like in the US and Central America, and we'd like to highlight the progress made in Mexico and Dominican Republic. And overall, the main geographies of the group have grown double digit, and we see a very important geographic spread for the company. When it comes to slide 7, you can see the performance of our raw materials. And here I'd like to let you know that for the second row, we have the commodities index in dollars, which shows a drop of 11% compared to the same period of 2022. This is due to a reduction in the prices of some proteins, fat, wheat, and coffee mainly. On the right-hand side of the slide, you can see that the cost of Grupo Nutresa is in local currency, and this shows the volatility of the interest rates that we've experienced in the region in past months. On the other hand, you can see the increase of the share of some raw materials like coffee and wheat because of the price increases of these commodities, but also because of the increases of sales of these categories. Here, on this list, on this breakdown, coffee leads with a share of 19.5%. Now, to deepen on aspects of profitability, I'd like to give the floor to our corporate finance VP, Jose Domingo Penagos. Thank you. To all of you, good morning. As usual, when we look at our financial statements, we start with slide 8. So please look at it, and we'll look at the EBITDA of the quarter and then the accumulated. Before the figures, I'd like to make some overall comments on the context, and the first is macroeconomic. The macroeconomic setting in every country of the region, and we say all of them because the US hasn't had much of the inflation, but we've all seen, we see the volatility of the currencies in each of the country that are exposed to dollars. And the second is inflation, as I said, practically in every country where we operate. And this gives us a consequence, a moderation in home consumption, as Carlos Ignacio already said. And this, of course, hits the profitability and the results of the group. Our response to these two periods requires from the group flexibility, agility, and capability to adapt. And something very special cross sectionally is to maintain supporting the brands. Everything has to do with investments in our points of sale and marketing are fundamental to drive the consumption of our clients at our different points of sale, also in experiences provided in restaurants. So it's key to react, but not to overreact on a short-term basis on this over these macroeconomics. Now let's look at the figures of the quarter. We have an EBITDA of 539 billion pesos, up double digit, 11.8%, and an EBITDA margin of 11.4%. Now, cross sectionally, because of the effects that I talked about, you can see more investments in marketing and trade, and we also see an effect of lower fixed expenses because of the volumes that we already showed you before. But we have business units with growths that are significant in the EBITDA of double digit. And here I'd like to mention ice cream, biscuits, coffee, retail food, and even the other. All of them are growing double digit. So let me give you some comments about each business. Let's begin with biscuits. The EBITDA grew 37% with a margin of 12.9, almost 13%. And this shows very good trade, and it's very balanced in every platform. We've mentioned this in different talks, but it's important. And biscuits has revenue that exceed those of Colombia. This is a balance that's great for the profitability. And in terms of volumes, and in the different geographies like the US, Central America, there's good performance, and this leads to manage the raw material increases that we saw. Not so much because of the commodities, but here we do have elements like wheat growing 23%, and for biscuits also, which we're managing this also, the coverages like for biscuits have given good fruits. The second business to highlight is coffee. Remember the steep growth of the commodities during every previous year. In this specific period, it grows below the double digit, but it has an accumulated level, and we do not transfer all of the effect of the commodity prices to our products, and this has an impact on the EBITDA, but it has good performance. The EBITDA grows almost 32%, although it's almost at 9%. When it comes to cold cuts, the margin is at 8.1%, decreasing 18.6%. There's a decrease in the trade that we mentioned in the prior section. And with that decrease, the dilution of fixed costs does hurt the profitability. There also logistics, the raw material, especially the meat has been affected, although the trend is more positive. Also pork and chicken. So this is an effect on cold cuts. When it comes to chocolates, the margin is of 12% and the EBITDA is flat. If you look at the growth, and for the period that we are recording, there are good coverages, and this activity has helped us with our profitability. And it's good to look at the outlooks, especially the commodity that has a higher trend now. And we will continue with their coverages. There's also an effect of the mix of the categories. So we do have bigger challenges ahead. But for this period, our EBITDA margin is at still 12%. This Tres Montes Luquete, remember, this is diversified units. This helps a lot. It has an increase of revenue of 63%. And this, of course, helps with the effects cross sectionally against to show something more healthy. Here, I'd like to mention that Tres Montes Luquete is present in different areas, Central America, South America, but also in Chile and Mexico. And in Mexico, it has been improving commercially, and it also has profitability levels that helps this business unit of Tres Montes. When it comes to retail food, the margin is 19, growing double digit, almost 12%. And there's a good balance between trade and the decrease of fixed expenses. There's a good management of these variables. Ice cream, very good results, almost 20%. EBITDA growing 53%, really driven by its sales, which is sustained, very healthy, and the dilution of fixed expenses helps a lot. It also maintains its good market share. It's supporting the brand, but that growth really helps to dilute and help with these results. Pasta, I already talked about the effect of wheat on biscuits, and in pasta, wheat is really heavy, and this commodity has had the pressures that I already mentioned, which impact, of course, its profitability and shows a margin of 8.7%. And this time, in this semester, it dropped significantly, 31%. In others, it's been sustained. Here we have food service, also sales in our alternative channels, and Dilemma, which is our pet food business in Central America, which is showing good results, absorbing the prices of the commodities and meeting its business plan. So these are the overall comments that describe the EBITDA. And also, when it comes to the macro effects, we have to keep in mind the interest rates, but that's the post-operating chapter because we also have things to talk about there. On slide 9, then, we see the EBITDA of the entire semester of 2023, 1.2 billion Colombian pesos, 12.3% margin, and especially a growth close to 25%, very much in line with the growth of our revenue. This is the result of very good profitability in the first quarter and the effects that we have just described. So that's the operating section explained through the EBITDA. Moving on to slide 10 and 11, we look at the income statement of the quarter and the accumulated. So let's begin with slide 10. Here we see results which are mixed among the operating and post-operating items. And so there's a good performance, but also there are challenges, especially with the interest rate on the mean line. So we have to reinforce that the investments in our brands have to continue constantly, and we do have challenges to reduce the fixed expenses because we have seen effects in recent months. It's cross-sectional, especially now that we're looking at this quarter. So we have an operating revenue growing double digit at 4,737 million pesos compared to those that with the variation of 18%. The cost of goods sold Here we have an effect that's worth highlighting. In the semester, we see an effect mainly of the last months of 70 basic points, but in the quarter, we have a structural improvement of 190 basic points in the gross margin. The gross margin has been pushed a lot in recent months because of the trends of the commodity prices. And here we have good news that helps a lot to the structural profitability of the group. In the quarter, when it comes to expenses, when you look at all of the items, these grew 24% versus the 18 in revenue. And it's because of the same effects, the fixed expenses, and to have good investments in the market. When it comes to exchange differences, we have operating and post-operating effects. In operating, we have an expense of 768 million because of the coverages of the working capital seen during the period. And net operating revenue is quite lower, mainly because of sponsorships in a restaurant networks in Colombia. So the operating revenue grew 17%. It's at 470,000 million pesos. In the middle line, for here we see the financial income. This is the profitability contributed by the operating cash flow of the group, while used for all the operations, but financial expenses. You can see that in semester and the quarter there are big increases, which is almost 110,000 million. We have increase of interest rates throughout the region, as I said before, and the accumulated in the quarter. And in the last slide, we'll be showing you what about the debt of the group. We also see an effect that's not cash, but it's registered here that has to do with the coverages that we use to cover the currency with the outlook that we had of the currency of the year and the revaluation that we've seen, especially in recent months. It's not cash, but there is a trend of an exchange rate that will leverage in the revaluation. In what we call uh, associates, we have Bancafe, Oca, and Alsea Starbucks. We have revenue in this period and also the accumulated. And when it comes to income before tax and the effective current tax, it's quite similar to those seen in previous periods. There is a decrease, of course, because of the lower profits of the period. And here you can see deferred income tax of 40%. Profit after taxes, 140,000 million, dropping 35% compared to the first semester of the year before. If we look at the accumulated, which is on slide 11, we have to look at the magnitudes. 9.6 in revenue, growing 36%. I already mentioned the effect on the cost, an improvement with the basic points, and this is lower, although there is an improvement of the gross margin. We'll also calculate the good management of expenses, but likewise, the emphasis we've made to support the brands in recent months. And here's growth throughout this chapter of expenses of 28%. This is slightly above the revenue. Also, there are effects because of the exchange differences. There is a revaluation of the semester of 13%, and that, of course, has an impact on the work. The items that I mentioned in the quarters of sponsorships and indemnizations have reached 12,000 million pesos in the semester, and an operating revenue growing 31%, 950,000 million pesos, Colombian pesos. So it's quite healthy. Post operating effects, let's look at the magnitudes here. In operating revenue, 26.4%. Also, we have revenue that are not in the first semester, but they are in the first. But dividends that grow 41%, and the effect of the revaluation in the coverages have to do with an expense of 58,000 million pesos. Financial expenses, I already mentioned, but in the accumulated, there's an increase of 240,000 million pesos. And if we look at this in percentage, it's 145% higher. The effective rate, 23%, very much in line with what we've seen before. It's close to 30% by the end of the year because compared with the first semester of the year. Net net revenue, net profit, it's close to 5.2%. So these are the financial results of the quarter and the accumulated. And on slide 12, that we have the net debt. But here we can look at the balance items of the group. So here we have the net debt EBITDA is 1.7 times compared to the year before. There's good coverage of the debt. It's a very healthy indicator, which allows us to have the organization with good debt levels, but with a cost of 12.9% in this case. So, although it's true that we do have good coverage of 1.7, which, if we weren't in the circumstance with the high interest rates in the region, that financial cost would invite us and occupy us to generate the cash flow that we need to pay our debt and have lower financial expenses with balance to keep supporting the operating activities, which show very sound results. So 1.7% in the indicator with the cost that doubles because of the rates of the year before, and a capex, accumulated capex of 162,000 million pesos. Remember, the budget this year is 700,000 million pesos, Colombian pesos, and eventually we will not reach that budget because although there are some seasons, we will have a better capex in the second half of the year, but when it comes to the equipment and the machinery is imported, and we will have a lower revaluation with the dollar, and that will be a benefit with the magnitude of the capex, without saying that we won't be looking at the investment closely. Remember, this investment is for growth, especially from exports, revenue, international revenue, generating dollars, which are so useful for the economic balance of the group. These figures of working capital show us return on investments of 11.5%. And the emphasis on the cash that I mentioned before has a free cash flow mainly through managing inventory. This is a chapter we've been working a lot since the beginning of the year. Rotation has been improving. And while we generate the capex, we will be looking for advance payments of our debt. Remember that the group's debt is multi-sectional, and therefore we can make advance payments. Also, in the last quarter, we reprofiled the cost of the debt of several items, and we paid several more expensive debts. And this, of course, improves or leaves less pressure on the financial results. It really depends on what happens in the market. So this is a summary of the financial condition. So let's go back with Carlos Ignacio, who will show the outlook for the end of the year, and then we'll have the Q&A session. Thank you, Jose Domingo. When it comes to outlooks, commercially, we foresee that in next months we will have moderate volumes in the different markets that we serve, and that this, along with the volatility of the exchange rates, will lead to a moderate growth of our revenue. The activities of pricing will be particular and lower compared to the same period of the year before. We also see a gradual reduction of inflation and interest rates in our strategic region. The execution the coverages and the efficiency and productivity plans that we have underway will allow us to reach the returns that we wish for. As Jose Domingo said, we have a better gross margin. We will keep growing, but more moderately, and we already explained why. But the combination of that better gross margin and working hard on productivity, especially in expenses, will allow us to reach the desired returns. So this ends our outlook, and now Catherine will open our Q&A section. Thank you, Carlos Ignacio. To all of you, we'd like to remind you that you can send your questions through the chat of the platform. We have a first question. We have a couple of questions from Juliana Usique from Da Vivienda Corredores. Let me read them. Part of these questions have been answered already by Jose Domingo, but still, we'd like to expand. The company still has the capex execution goal of 700,000 million. How have you been handling this since the financial expenses are still high? Thank you, Julian, for your question. I did talk about this a bit in my talk, but let me reinforce about the capex. We might not reach that 700,000 million because of the high interest rates that we have because of the equipment and machinery. When it comes to civil works, and there is no impact. These are costs in local currencies. So we might have a sub-execution of the capex. That's important by the end of the year. And when it comes to the debt, we have a multi-sectional channels here, and we even find up to 10 years. So what we've been doing so far is reprofiling the cost of some items, and as a consequence, this will lead these items to fill some spaces towards 5 and 7 years ahead with better interest rates. In addition, the cash that is generated will be used to make advanced payments of more expensive debts, because with our flexible multi-sectional channels, we can do this. Thank you, Jose. So far, we have no further questions, and I believe that with this, we end our earnings results webcast. If you have any additional questions, when you have the opportunity to review this information that we presented, of course, you can contact our investor relations office to help you with any question. Thank you all for being with us, and have a good week.